We set everything on TradingView. And is it okay if when I pull up the charts, I can show you how to use every indicator? Is that okay? Yeah? Because it looks maybe a bit complicated and complex, but in reality, you search for moving average, press 200, done. And it shows you how it looks like on the chart. Yeah. So I'm going to show you guys in a moment. It's going to cover the theory first. So the money flow index, the MFI. So MFI kind of uses stocks price and volume to predict the reliability of a current trend. So we need to know that the trend is valid. So because the money flow index, it kind of adds trading volume to the relative strength index. So it's sometimes referred to as volume-weighted RSI. So we kind of use the MFI together with the RSI to get some extra confidence. So we want to see that the money is moving in the right direction. So like RSI, it has oversold and overbought levels. So if you watch the MFI to move in the opposite direction to price, if we see that it's moving on the opposite side, it's a divergence, this as well. So if we see that a divergence, that is an indication that we will see the opposite happening. So it's just for you to understand. I don't know everything behind these because you don't need to. You don't need to know why the Fibonacci retracement or why the RSI works like it does. It's good to know, but you don't need to know how to or what's behind it to use it. You need to know how to use it. But it is calculated based on price movement compared to the prior session like RSI. So it's a lagging indicator, this as well. But MFI adds volume to reflect the average number of dollars moving through the market on a given day. So it works this way, right? So a bullish signal occurs when the MFI indicator travels below the reference line, which is 20, and oversold and then rallies above it. So it's the same readings as the RSI, just the mathematical formula is a bit different. So you see oversold levels below 20 and overbought levels above 80. So you just look for these. So if you just add both of these on TradingView, it will show you that automatically because it makes the calculations by itself, which is very good. I have no idea how they did it before TradingView. Marcus, you have been in the game a long time. What did you do before all these that you can use it on TradingView?
So I started off with TC2000.
Oh.
That's Warden Brothers.
Yeah.
And you had to pay for it.
Yeah.
Oh. But they didn't have a lot of these indicators on there. Yeah. And they didn't have any of the good stuff that TradingView has. TradingView is really good.
Yeah. Now it's free. Even. Yeah. It's pretty cool. Technology. Yeah. All right. So you see, it's the same readings when it's overbought, zoop, down, and then the opposite. So you just read it the same way as the RSI, but it just show you the flow of the money. How is the flow moving? So a lot of money in, too much money relative to the price, and money moves out.
So why you should use both of them?
Yeah, you could use one of them, but they're good to use together because they give you extra confidence since they're showing different stuff. So the RSI kind of reflects the price relative to itself, while the MFI it reacts to the volume. So then you take both the volume and the price into consideration. Yeah, but yeah, I don't use MFI, but you could. So yeah, so we don't need to look at that, but this is just a good example. You see that it's overbought levels and it goes down a bit, but even though it goes down, like with the RSI, not necessarily the price don't need to move down that much. If it moves horizontally, but if there's more volume of sellers than buyers, then the MFI will move down, but the price will move horizontally. So it kind of reflects the volume if it's more sellers than buyers. So I wouldn't use it on my own, or on its own. I would just use it together with all indicators, together with a strategy, to gain extra confluence. So as long as you put the pieces together, you use the wedge, use the volume, you use the MFI and the RSI, And then you use some risk management in that as well. Done. You can create your own strategy, but create a whole strategy, not just take one little puzzle piece and do it based on that. Sometimes it works, but not always. All right, so OBV is another one. You can read about this one, but it's also on balance volume. Also takes the volume in consideration. So it's also a good one to use. And yeah, it works similar to the MFI, but it doesn't show you like overbought and oversold levels. But what it shows you is on balance volume. So what we look for here basically is that we see that we have a channel in the volume, and the volume usually breaks out before the price does. So when we see a breakout, so when we have like a resistance line and we see a breakout to the upside, so it's a bullish divergence. See, they work the same way, right? We have divergences. The OBV moves, it creates an upward moving support, while the price makes a downward moving support. So this is how you use them, right? You see the divergence, and then you have the resistance line, and the OBV crosses above it before the price, and that's a bullish signal, a good signal to buy. And it's based on volume. So you see, well, there you see when the volume gets a lot higher, it moves up as well. So it's based on selling and buying pressure. So OBV, and it's the same thing. So you use either MFI or on balance volume. Cool.
The RSI is as well showing volume bought and sold rather than price, isn't it?
The RSI relative strength index. So it's based on the price, like how is the price, how it's been kind of reacting and trading based on kind of previous action. So if there's a lot of buying, it's not based, the calculation is not based on volume, but you know they are together. So if you look at the MFI and RSI, they move very similar. Yeah, they do. So they're kind of, because it kind of moves hand in hand, right? If the stock moves up a lot, it's usually on high volume. So then the MFI moves up and the RSI move up because the price moves up. And then you go to the oversold levels on both of them. So they move together usually. But they could show different divergences. They could show different divergences because the price and volume are different. Like when the price still moves up, but the volume gets smaller, then you might see a small divergence in the MFI and the RSI. So that's something to look out for. But like I said, I don't use MFI. I try to keep it as simple as possible. And to use like the Buffalo without indicators, I think it's better than to use indicators, because it's good to have the foundation strong and then you add things to it that helps you to improve your trading. But one thing at a time. So then we have stochastics as well. And so we use stochastics in a sideways moving market. It works in a similar way as the RSI. So it also moves to up to oversold and overbought levels. So anyone heard about stochastics? Yeah? Anyone using them? Please raise your hand. Who has never heard of it? Yeah. So thank you for sharing. And you see that there's millions of these. There's so many indicators. And you can even create your own indicator if you're good enough to do that, you know? So if you see like a trading robot, how many have heard about trading robots? How many have tried trading robots? Yeah? Was it successful? No? Oh, no. Thank you for sharing. Well, the thing is, they can base their trading robot, so when the RSI is oversold, it will buy for you automatically. Or when it's overbought, it will sell for you. That's how easy you can do it, and yeah, it works sometimes. And so that's how like trading robots works. They create a trading system. So we could do one on Buffalo, like when our signals are in place, it will buy for us. But it works in certain markets. So that's why it's really important to, we can use some of these. And the same thing here, right? Which one do you think, oh, that looks fun, I'm going to use that. Because you can make money with all of them, but foundation strong still. Use the Buffalo. So it can be used to estimate when the price of markets has moved too far and is due to change direction. So it has become very popular with intraday or end-of-day traders who use it especially for short-term trading. So it's good for Buffalo because we use it in oscillating markets when it's moving up and down a lot, like Tesla. So they're best used for divergence patterns. Have you heard about divergence before? A couple of times now, yeah. So kind of for sideways trending stocks, for warnings of potential entry and exit signals. So it's used, you see, it looks very similar to both the RSI and the MACD even. So you see overbought, oversold, we know that now. So they are very similar, but they're based on some different mathematical things, right? Or formulas. So two main types of settings. We have the fast and slow stochastics. It's like the moving average. We have a fast and a slow one. So the red line, it represents the actual rate of change in price action. So the line is the slower and smoother of the two. So if we look at the blue line, it's a fast line and represents the moving average, which is a useful trigger for an entry point. So we have a slower moving line and a faster moving line. We look for crossovers and we look for divergences and we look for oversold and overbought levels. So we look for the same things like we do in the RSI. But they're just based on some different things. So the upper horizontal line, so it's at 80, that's overbought, and the lower at 20, it's oversold. And in a rising market, the indicator line may remain in the overbought territory for quite a while, like Bitcoin from 5,000 up to 20,000, remain in the overbought levels.